Welcome back to Money Discourse. Sorry we've been away for a while. Rajan's been flying around the world in his private jet, and I've just been stuck in the UK with the miserable weather. But yeah, coming up, are the rate hikes done for the major central banks? We're coming to the end of earnings. How did the major players fare? And how are the automakers responding to rates staying at these levels for longer? Rajan, why don't you take it away?
Yeah, well, it's good to be back, and yeah, my private jet is the little jet on the Monopoly board. But yeah, it's been a busy time recently. It's a little bit of uptick in volatility. It looks like the markets have definitely sort of, just like we said at the beginning of the year, they've been very choppy and range bound, and every time you think it's going to go one way, it then comes back the other way. And so last week we had pretty much most of the major banks keep rates on hold, and it does seem like pretty much what we thought, that rates have pretty much reached a peak. And I don't think there's any real advantage of actually having rates any higher than where they are now, given that it is really, you're starting to see the consumer actually under a lot of pressure. The higher rates, you can see this in auto sales as well. You're seeing a lot more discounts. You're seeing home sales slightly slow, and Fed basically said that it's starting to work. But with all of these banks, they don't want to be nonchalant. They're all going that they'll stay the course and do what needs to be done to fight inflation. But the markets, especially the Bank of England, they're already pricing in 75 basis points of cuts next year. And it pretty much seems like with the current economic data that's coming out, we had non-farm on Friday, and that came in below consensus, and it's got the market pretty much thinking that we're done where we are with rates. And so we've had a pretty positive reaction on last week. I believe was the best week the markets had this year. It was pretty much everything that we went off the last couple of weeks pretty much got all made back up last week. And we're pretty much on a solid footing this week as well. And again, it's just the same players as these big tech names, and a lot of these beaten down names have come back up. A lot of these earnings surprises have all been to the upside. We saw Square have a big reaction to the upside today. Datadog, they reported they're up 30%. And then they're bringing along Snowflake with it, and MongoDB, and we had positive reactions for AMD, Intel, I believe. But I would say the companies that really have not fared as well. Well, we saw Google come off 10%. That was a big one. Microsoft was positive. Netflix was a positive, but the automakers, now Tesla didn't have a great reaction. Ford was down 10%. GM was also down. So, the autos are definitely having issues right now, and especially on the EV part of it. So, again, all of these autos, especially the legacy automakers, had all these big plans for EV production. And clearly now they're starting to taper back on those expectations based on current demand and, the cost of manufacturing for them. And then Tesla, and along with these other ones, to try to hit their targets, to continue to cut prices. Competition is fierce in China. I'm seeing the Chinese EV sales still really benefit. We've seen BYD, totally grow at a rapid pace. But again, Ford, GM, they're struggling. Rivian are just doing what they need to do. Lucid, I think it's a sub $5 stock now, last time I checked. So, it's just all in all right now, it's a pretty choppy environment is probably the best way to put it. We've got, tapering back from the Fed, but you can't, rates are still above 5%. So again, that's causing some, headwinds, and you've got the student loan repayments restarting again. So you have that headwind there as well. And in general, just exactly what we thought at the beginning of the year. We're just choppy markets, just trading up and down. And in a way, for trading, it's actually a great environment to trade. Just keep on playing the range. So this is where we are. So if we look to check out the chart right now, and we can see how we had in April this move higher. So we're off a low base in January because we had that sell off at the end of November, December last year, and then we had that big move up towards 4,600. Then we moved right back down to 4,100, and we pretty much retraced about just over 50% of that move higher again. So you can see we're trading in this channel, and we're coming back towards that upper end. But if you can see that, we pretty much went from the low end of the channel to the high end of the channel in 1, 2, 3, 4, 5 odd trading days. And now we're sort of leveling off around this area. So we've still got like Nvidia, Snowflake, and some of these companies to report. So it'll be interesting to see how much of a driver there will be. But again, if we push above 4,400, who knows? We could get a bit of a Santa Claus rally, which we haven't had in quite a bit of a time. And we might push back towards that 4,500 mark. But otherwise, again, I just expect us to chop sideways, up and down towards year end, given currently where everything stands and the current state of the environment. But I mean, this is what I see so far. I mean, what about on your end?
Everyone probably is thinking, why did we have such a massive run last week? And if you listen to the All In podcast, it was an interesting observation by Chamath, who was saying that the end of October is the year end for a lot of these mutual funds and pension funds. And they have to actually report all of their holdings at that time as well. Well, most of them do. So this is when they kind of sell off to try to stay as neutral as possible. And then when it hit November 1st, we had a massive buying spree from them because they're actually not supposed to be holding on to any cash. They're supposed to be fully invested at most times. So that was actually a really good explanation, in addition to Chair Powell's dovish comments in the FOMC meeting. Do you think that this is the time to like lock in the 10-year as high as it's going to potentially get? Or do you think that, there's still some more pain to come and Powell's going to actually just rug pull us again?
Well, see, I mean, the way I look at the market right now is that, I'm a born just degenerate gambler, and I like my calculated gambling in the market, so I'll always be in and out. But if I had a whole stash of money, why even go through all the trials and tribulations along with this very whippy market right now, where there's not really a clear trend, and we're just seeing extreme moves here and there when you can get 5.5% risk free right now. And the thing is that realistically, I mean, at best, I reckon if you get 10% return on the market, maybe you might be good. But the thing is it worth that extra, added uncertainty when you can get the risk-free rate is 5.5% right now? So, I mean, at this moment, like, I think it's much more prudent to just stay in treasuries and just sleep well at night and not worry about what the next development's going to be. Like, if there's going to be any spillover impacts from the Gaza, the impact, all the tensions that are happening in Gaza right now, or still Russia, Ukraine, and whatever else might come along. So is there any real, I mean, if I had a whole bunch of money, I'll just stick it in 5%, 10%. I mean, 5.5% yield in treasuries,
10%.
just the easiest. Yeah, 10% would be good, but yeah, just seems to be a no-brainer right now. So that is where I would stand, and I think that is pretty much the stance of a lot of people. When you look at a lot of this data from this LIPA data, and you see where a lot of the funds are going, and these fixed income funds is getting a lot of huge flows right now, because again, there's a lot of money on the sidelines still, and they're rather just park it in treasuries than in the stock market right now. But as you've seen this last week, that when something goes, it goes very, very fast. I mean, Square was below 40 and now it's 51. And I just need that with PayPal, which is still my biggest dog on earth, right? But the thing is, you can see how quickly these shares can totally just turn around. I mean, Nvidia was going back towards low 400s, it's back to 450, 460 even, and Microsoft is above 360. Walmart hit a 52-week high. We're just seeing a lot of some of these stocks, continuing to just pound out those gains, whereas the dogs are just remaining dogs right now. And it's a bit of a tough one to know exactly where it is. But I mean, if you're just basically in the S&P 500, you're covered. I feel like it's really soothed out a lot of the inconsistencies in this market right now, because you've got the exposure to these massive caps. I mean, we had Apple earnings. I mean, the guidance wasn't strong. I mean, it was still a solid quarter, but it's not a growth quarter. But yet Apple went down to 168 and it's back at 180 again. So after all of that, it didn't even really matter. And Google went down 10% on it. The only thing you need to do on that, which is buy the dip, because these big caps, that's all they do, just come back. So yeah.
It seems like they're the black holes just capturing up most of the market.
Digging a bit into autos, and so we had Ford and GM, the two major US legacy automakers, and they didn't have favorable reactions. Now, obviously, they've been under pressure a lot from this UAW negotiations, which now they've all they've all agreed to. I'm not sure if this has all been ratified yet, but Stellantis, GM, and Ford, they've come to some type of agreement. But again, it's going to add a lot to their the marginal cost for each vehicle by 2027. It's going to, I think was it for Ford or was it for GM? It's going to be almost like $900 more. and you saw Ford and GM, and while they're still committed to EVs, they're scaling back their production ramp since they have just a lot of inventory now just available. And again, just the algorithm has caught me. I always look at cars and you see some of these deals out there for a lot of these EV lease deals are just incredible. So even these, if you're not eligible for the $7,500 tax credit by getting it for a lease, you can get it and just benefit from all of this. So there's some real aggressive campaign to try to clear off some of these EVs on the lot. So if you are looking for something, it's definitely a good time to dip your feet in and see what you can get from some of these automakers, because they want to get it off their lot. And I feel like they're much more, isn't it just a change when these guys were all charging $5,000 premium, $10,000 premium to get a car? Now they're just begging you to take it off the lot. So it's amazing how this whole turnaround has happened especially in the EV space, So
and what does that teach you? It's just like, whenever there's a bubble like that, it never lasts, right? The supply will always catch up to demand. Obviously, this whole pricing drops from all these automakers is all happening because of mainly rates. It's kind of become a bit more of a perfect storm. We had the massive, huge amount of demand because of COVID and the free money, and then it's kind of all taken away. So it's kind of just been like at both ends of the scale rather than kind of, being a bit more of a smooth curve. And I think, like you said, like a lot of these automakers, they're really suffering because, like we've obviously seen Elon going nuts at the investor call that they had for Q3, and obviously warning that things are going to be really tough going forward. But the other automakers weren't really showing too much in terms of price drops, especially the luxury ones like Mercedes. But now you've seen with these kind of posts that like they're discounting quite heavily. You look at it as a C coupe, right? Down 24%, which is massive. Quite a few of them are like double-digit percentage. And when you think about why they've been able to hold up a bit better over these quarters, is because they have a whole dealer network which they can kind of push inventory to, right? So they can buy it at subsidized costs, whilst Tesla has a direct-to-consumer model, so they feel it first, right? Whilst all of these automakers, obviously, it's quite smart of them. They can push out as much inventory as they can first, and then obviously incentivize on the back end because they can put it on a different line item. The subsidies that they need to put out, they can add it to marketing and all of these other line items on their earnings. So you don't really see the real impact as transparently. So yeah, I mean, like, what do you think is going to happen?
Yeah, I mean, like you said, everything goes through peaks and troughs, right? So I mean, just how when everybody wanted one, now it's not as much. And I think what the space is crying out for is just a real cheap EV, like this 25 grand one, because a lot of the commentary that I see is, despite like we got the Volvo EX30, you've seen that obviously the Chevy Bolt and a lot of these other cars, but still is considered as expensive as 30 grand. I mean, you can get a Nissan Versa base model for 15 Gs, right? And then like a Maverick for 21. And I think but like we were saying before,
who's gonna actually be able to create one profitably? It seems only China, maybe Tesla, but like that would obviously kill their margin too. So like it seems like this is going to be the Chinese invasion that's going to come across when some of these automakers drop a considerable amount of size, because it's gonna hit them really hard. And like you see like VW laying off thousands of people now. Like it'll be so interesting to see, because if China wins here in terms of like that low cost EV, which it seems like they already have like kind of penetrated a bit of Europe, but once they really penetrate the States with those, it will kind of be like Toyota back in the 70s 80s when they came out with their low cost efficient engines, and they kind of like stole so much market shares from the incumbents. It seems like this is going to happen, but now China's going to take over. And really, if you see some of their, like we were recently in Germany, and you see like the quality of these cars, when we saw that hi-fi one, like if that had a Mercedes badge on there, like you couldn't even tell. Like it's like really impressive.
It's amazing quality, and it's really not boring designs. It's really futuristic. I think the design language is like amazing. I mean, and like we were discussing before, I mean, I think I was reading this one report where the actual biggest, so the market for new EVs is suffering, but the used market is booming. So, you know, I mean, you can, again, I haven't looked at it, but like, you know, when you're getting some of these used cars now dipping towards close to that 20 grand mark, and if you want something, it's just much more advantageous to get a used one. There's some great deals. I'm pretty sure Model 3s are all tipping towards that low 20 mark, and some of these other ones as well. And so there's different avenues where people are still picking up the EVs, but picking it up on the second-hand market as it's a much more affordable price.
It's a no-brainer in terms of just economics, right? So if EVs, like they're on a trend in terms of on a downward, price trajectory. Now, the thing is, with the EV, you pay up front for a battery, like the storage mechanism, right? Whilst it's like prepaying for a whole bunch of fuel, right? Like, because the fuel is supposed to be much cheaper if you're obviously not in an area impacted so greatly by energy prices. But like, you know, you're paying for so much more of that kind of fuel up front. And now, like you're saying, with the secondhand market coming down, like there's just so many more people that it'd just be an absolute no-brainer in terms of the servicing and all of that you have to do on EVs. Like economics will win out, right? So no matter what you read on these like newspapers and magazines and what you read online, like people will always gravitate to the cheapest cost option, right? Especially on the lower end, and that will filter on. So the demand for EVs will still be there. It's just obviously with this type of market, with rates coming so high.
You can see that there's a lot of subsidized rates from the major auto dealers, but probably, you know, the vanilla car loan is probably around 8-9%, I'm guessing, something like that. But you know, I don't think it's over for EVs at all, like some people are saying, because, you know, people are just so dramatic, right? You know, it's just because this is the way the market is. And this is the thing, is everything in hindsight, we spoke about it before, but when things are just so hyped, especially, you know, in 2021, and, you know, we spoke about it, and we look at where Matterport was like $33, Peloton was like 170 or something. It's $5 now, right? And then you saw some of the gains in some of these stocks. Beyond Meat, you know, just I think about $5-6 stock, it went up to 220, and it just, when you get that type of euphoria, you should be selling till your hands bleed. But the thing is, at the time, you just get caught up beyond levels, and then you just think, oh, this, you know, I'm not going to sell. This is going to be, you know, just the whole psyche around the mind to try to deal with euphoria type situations. Because the worst thing is, you might take a nice 100% profit. Now, tell me right now, in today's market, if you've got 100% winner, you'll take it. You take it with your everything you got. But, you know, in that market, 100%, and then you miss the next 100%, you're like, crap, that's it. I'm never going to sell too early again. And before you know it, you're 90% down, which is,
this
is
how
so many, yeah.
The market just gets you with their, like, you know, it tempts you like a beautiful girl, just like, you know, you shouldn't, but yeah, might as well. Oh yeah. Gosh. So what's your thoughts on crypto? Looking at BTC, it's hovering around the 35,000 mark. It's like more than double from its 2022 lows.
I mean, if you look at crypto right now, crypto is a bit, you know, how I would describe the market is a bit like the stock market. You've got like Bitcoin, which has bounced quite a lot off the low, and Ethereum, but the rest of them are still down like 90-odd%, which is like the other components of the S&P, or like the bubble type scenario. But the thing is that there seems to be a lot more stabilization in Bitcoin. If you actually look at the way it's moving, it's much more controlled. It's moving much more like a currency right now. I think it's definitely matured a lot more as a product. And now with all of this talk that, you know, we're going to get approval for a spot Bitcoin ETF, which will allow a lot more exposure to it from different funds. And that, you know, that can only be a bullish thing. And, you know, we had Coinbase report results just recently. I think it was on Thursday after the close, and you see their adjusted EBITDA is now solidly profitable. You know, so despite still the lack of volatility in crypto, they're doing a lot better, and a lot of these crypto related stocks are obviously benefiting. And I think, yeah, in general, crypto is probably a good thing in terms of an investment if you just stick to the big ones. And right now, it's still those smaller ones. It's just the Wild West. Like there was that Safe Moon court case that just happened, and yeah, and the founders basically said, yeah, we're just trying to rip everyone off. And there's still so much scams happening in the space. It's incredible, but stick to the big ones. And I think right now those are your least riskiest plays. But
what about Solana? That's like,
oh yeah, so that had the big move as well. I don't even know why that went up so much, but you know, it was a big move. And so yeah, it's starting to now really filter out a bit like the stock market, where the real ones are starting to come through, and all the fake ones and all the garbage is just starting to fall away from the wayside. So yeah, I think there's a lot of synergies to what is happening in the market, and you know, all those hyped up stocks of the past similar sort of thing is playing out in the crypto space. Just want to say, if you haven't already, do subscribe to our Money Discourse Twitter page. You get loads of good content. If you're not already, keep in touch with our average trader portfolio. It's always loads of good stuff there. All the trades that come in this year has not been that bad at all. So yes, definitely worthwhile keeping in touch. So here we've got 114 followers now. I think last time, so it's about 50 or 60 from the last time we did it. So yeah, so feel free to subscribe to that, and you'll get a lot of the earnings coming up, some of the movers and everything like that. Yeah, so make sure you do that and like and subscribe to the channel, of course.
So we'll see you guys in the next one.